closing down of the business is known as dissolution of partnership firm. Debtors has been sold or it is been realized at 5% less than the amount. And my dear students, don't always forget to write the heading, that is realization account. So whatever which is deducted from debtors, it is treated as what? It is liability. Hello everyone, I am Harshita, lecturer, Department of Commerce, Vidhyaashram First Grade College, the Temple of Excellence, Mysuru. Today, we are in the third session of Unit 6, that is Dissolution of Partnership Firm. So, my dear students, now we shall quickly recall what we have discussed in a previous session. So, in a previous session, we have learnt about accounting procedure during dissolution of partnership firm. So, before that, I'll tell you what is this dissolution of partnership firm. So, dissolution means closing down of the business is known as dissolution of partnership firm. In the sense, if a partnership firm gets closed, that is known as what? Dissolution of partnership firm. So, during dissolution of partnership firm, what are the accounting procedure? So, what are the accounts to be maintained during dissolution of partnership firm that we have learnt in a previous session. Next, meaning of realization account. So, this is one of the account to be prepared during dissolution of partnership firm, that is realization account, where we are going to sell all the assets and pay the liabilities, that is outsiders liability. After paying the liability, if any amount is left, that is realization profit or loss, that has to be distributed among the partners in their profit sharing ratio. Next, problem on dissolution of partnership firm. So, we have solved a 15 marks problem on dissolution of partnership firm. In today's session, we shall continue with one more problem that is relating to dissolution. So, go through the problem here. Supriya and Monica. So, they are the two partners, Supriya and Monica, who are partners sharing profit and loss in the ratio 3:2. Now, here, who are the two partners? Supriya and Monica. What is their profit sharing ratio? 3:2. Following is a balance sheet as on 31st March 2019. So, before dissolution, they have given the balance sheet of the firm. Now, go through the balance sheet here. Balance sheet of Supriya and Monica as on 31st March 2019. So, here the balance sheet. In the asset side, we are having cash at bank. How much? 40,500. Next, stock 7,500. Sundry debtors 21,500. Less provision, how much? 500. So, outer column 21,000. Next, fixed asset 36,500. Now, coming to the liability side, we are having Supriya's capital 32,500. Monica's capital 11,500. Sundry creditors 48,000. Reserve fund 13,500. So, the total of both the side is 1,05,500. Now, let us see what the adjustment they have given. The firm was dissolved. In the sense, the firm has been closed on 31st March 2018. Close the books of the firm with the following information. So, they have given certain information and they are asking us to prepare accounts during dissolution of partnership firm. Let us see what are the information what they have given. Debtors realized at a discount of 5%. So, here debtors has been sold or it is been realized at 5% less than the amount. Now, what is the amount of debtors here? So, the amount of debtors is 21,500 and they have told that they have sold at a discount of 5%. Next, what they have given? Stock realized at rupees 7,000. So, stock also they have sold at rupees 7,000. Fixed asset realized at rupees 42,000. So, realized is nothing but selling of assets. So, here fixed asset sold at rupees 42,000 and we have a realization expenses 1,500. So, what do you mean by realization expenses? As I told, so in the process of dissolution or in the process of closing down of the business, so they have to incur certain expenses. So, they have incurred certain expenses which is known as realization expenses or dissolution expenses. So, here realization expenses 1,500 and the creditors are paid in full. So creditors is what? It's a liability and they have paid that liability in full. Prepare necessary ledger accounts. Now which are the accounts to be prepared? We have to prepare realization account, partners capital account, and they have not given partners loan. So no need to prepare partners loan account. Directly we have to prepare bank account. So which are the three accounts to be prepared? Realization account, partners capital account and bank account. Now we shall directly move on to the first account to be prepared, that is realization account. So what is the format of realization account? We will be having debit side and credit side. Under debit side, particulars amount, credit side particulars and amount. And my dear students, don't always forget to write the heading, that is realization account, and even this debit and credit. So DR and CR. So we have to write that. That is, the format is equally important along with the solution what you write. So here we are having debit and credit side. Now we shall begin our realization account. So which is the first step? Transfer all the assets to your debit side except cash or bank and profit and loss account. So transfer all the assets except cash or bank and profit and loss account. We shall transfer all the assets which they have given in the balance sheet. Now we shall begin with recording of entries, that is transfer all the assets except cash or bank and profit and loss account. Now whether we have to take cash at bank? No. Next, stock. We have to take sundry debtors, we have to take, but there is a provision. So what is this provision? That is less provision for doubtful debts. So whatever which is deducted from debtors, it is treated as what? It is liability. So immediately while recording the assets in the debit side, immediately we shall record this provision for doubtful debts in the liability side. So it is what? It is liability. So it's nothing but outsiders liability which have to be taken in our realization account. So first we will record the stock. That is how much? 7,500. Stock 7,500, which is the next one. So we are having sundry debtors 21,500. So we will take this 21,500. Immediately we will transfer the provision. So what is the provision? Less provision for doubtful debts 500. So immediately transfer to the credit side because it's a liability. So most of you will forget. So my suggestion is that whenever you record the asset, that is debtor, whatever which is deducted from debtors, immediately transfer in the credit side. Why? Because you will forget it later when you are recording the liabilities. So we have recorded stock, we have recorded sundry debtors, and there is a provision. So provision is what? It's a liability. Transfer to the credit side of your realization account, it is 500. By provision for doubtful debts, 500. Now come to the next one, fixed asset. Fixed asset 36,500, transfer to your debit side. Fixed asset 36,500. Now we have transferred all the assets except cash at bank. So transfer all the assets. So this is the first step, that is transferring of all the assets except cash at bank and profit and loss account. And in debtors we had a provision and we have transferred that provision to the credit side because it's a liability. It's not only the provision, if anything which is deducted from debtors, immediately transfer to the credit side of realization account. Now we are done with the first step. Now record all the liabilities except profit and loss account, reserve, fund, partners capital and partners loan. These 5 items you have to leave and record all the liabilities. So which are the liabilities to be, which should not be considered? It is profit and loss account, reserve, next is fund, next partners capital and partners loan. And it should be partners loan only. Partners loan. Except these 5 items, transfer all the liabilities. Now go through your balance sheet. Here they have given Supriya's capital. Whether we have to take? No, because it's partners capital. Next, Monica's capital we shouldn't take. Next, sundry creditors. So it is what? It is a outsider liability. We have to take 48,000. Next, reserve fund. So here there is a reserve fund. We shouldn't take that reserve fund. So transfer all the liabilities except profit and loss account, reserve. Then if there is any fund, next partners capital and partners loan. Here we will transfer only sundry creditors because we shouldn't transfer partners capital as well as reserve fund. So transfer to your credit side. So buy sundry creditors 48,000. Now we are done with second step. That is transfer of all the liabilities. Next, what you have to do? Sell the asset. So when you sell the asset, what you will get? You will get either cash or bank. So how do you record? By bank account. For which entry? For assets realized or assets sold. So why it is by bank account? Now if you see the balance sheet, they have given cash at bank. So write it as by bank account. By bank account and write in bracket assets realized. Now go through your adjustment. What they have told here? Debtors realized at a discount of 5%. Now in your balance sheet, what is the value of debtors they have given? 21,500. That is before provision. Debtors is how much? 21,500 minus 5% discount. So discount is nothing but what? Deduction. So minus 5%. So you'll get how much? 20,425. That is 21,000 minus 5%, or you can record it as 21,000 into 5%. So you'll get an amount. So 21,000 minus that particular amount. So you'll get how much? 20,425. Next, what they have told? Stock realized at rupees 7,000. Next, fixed asset realized at rupees 42,000. Here they have directly given the amount. Record that. That is under by bank account, you have to record one by one which are the assets realized. So sundry debtors, you have calculated 20,425. Next, stock 7,000. Next, fixed asset 42,000. Total it and write in the outer column, you will get 69,425. There are no other assets being realized. So there are no other assets realized. We have recorded this one and we have recorded the second adjustment and we have recorded the third adjustment. Next, what they have told? Your fourth step is, now we are done with third step. That is assets realized. So which is a fourth step? That is payment of liability. Now if you see your adjustment, here we are having creditors are paid in full. So creditors is what? Liability, and we had only one liability to be paid. Which is that liability? That is creditors. So no need of provisions. So the outsider liability. So we have to pay the outsider liability, that is creditors. So we have to pay that creditors in full. So how do you record the entry? That is your fifth step is payment of liabilities. So how do you record? To bank account, in the bracket liabilities paid off. So what is the amount of creditors? That is 48,000. So where did we get this 48,000? If you see the balance sheet, we are having sundry creditors 48,000, and in the adjustment they have told that creditors are paid in full. So how do you record? To bank account, in the bracket creditors paid off, or you can write it as liability paid off, that is 48,000. Now we are done with fifth point. Next, which is the next one? Sixth one. If any assets is taken over by the partner. Now go through the adjustment here. See whether any asset is taken over by the partner. There is no other asset which is taken over by the partner. See whether the liabilities is taken over. No, there was only liability and it was paid in full. There is no liability which is taken over. So no need to record. Next, which is the next step, that is for realization expenses. So we are having a realization expenses of rupees 1,500. So how to record? In your debit side, you have to record it as to bank account. In the sense, payment of realization expenses. So realization expenses data to bank account. So record in the debit side to bank account. That is for realization expenses. So what is the realization expenses? 1,500. Now we are done with all the entries relating to realization account. First we have transferred all the assets except cash or bank and profit and loss account. And we have immediately taken the reserve to the credit side of realization account. And the second step is we have transferred all the liabilities except reserve, fund, profit and loss account, capital of partners and partners loan. And which is the third step? We have sold the asset. In the sense we have to record for assets realized. So here debtors were realized at 5% less than the value. Next stock was realized. Next fixed asset was realized. So we have taken it as by bank account for assets realized. Next our fourth step is liability paid off. So this is a fourth step, that is liability paid off, and we have recorded there was only one liability, that is creditors, and the creditors was paid in full. How much? 48,000. Next, fifth step is asset taken over, but in this problem there was no asset which is been taken over by the partner. And a sixth step is liability taken over. There was no liability which is taken over by the partner, so no need to record. Next, seventh step is realization expenses. So we have to record it as to bank account realization expenses 1,500 what they have given in the adjustment. Next, what you have to do, we have to balance both the side, and the balancing figure will be either realization profit or realization loss, which has to be transferred to partners capital account in their profit sharing ratio. Now we are done with recording all the entries. Now balance both the side. Add all the amount in the debit side. So when you add 7,500 plus 21,500 plus 36,500 plus 48,000 plus 1,500, you will get 1,15,000. Now coming to the credit side, we are having 500, 48,000 plus 69,425, you will get 1,17,925. Now see 1,17,925 in the credit side, whereas in debit side we are having 1,15,000. Now credit side is more than debit side, so write that amount both the side, that is 1,17,925 both the side minus 1,15,000. So we'll get a balancing figure of how much? 2,925. Now what is this 2,925? Your credit side is more than debit side, right? Here credit side was 1,17,925, whereas your debit side was 1,15,000. So your credit side is more than debit side. It means what? Realization profit, which has to be transferred to partners capital account in their profit sharing ratio. So here the balancing figure is 2,925. So to profit transferred to who are the partners? Supriya and Monica. Supriya's capital and Monica's capital. Transfer this profit, that is 2,925, in their profit sharing ratio. So what is their profit sharing ratio? If you see the question, their profit sharing ratio is 3:2. So transfer in that ratio, that is 3/5 and 2/5. So 2,925 into 3/5, you will get 1,755, that is for Supriya, and for Monica 2,925 into 2 divided by 5, you will get 1,170. So this is how you are going to prepare your realization account. Now we shall prepare partners capital account. So you will be having debit and credit side. Under debit side particulars, and you have to draw column for each partner. Who are the two partners here? Supriya and Monica. In the same way, if you come to the credit side, Supriya and Monica. Particulars, Supriya and Monica. Now, how to begin our partners capital account? First, we shall bring the balance of capital of the partners. Now, if you see the balance sheet, now here they have given Supriya's capital and Monica's capital. So, transfer this capital to partners capital account as by balance brought down. It is how much? 32,500 and 11,500. By balance brought down, what it is? It is capital of partners, that is Supriya 32,500 and Monica 11,500. Now we are done with transferring the capital. Next we have to transfer realization account balance. So this is realization account balance. So here it is what? It is profit. Now if you see your realization account, So what it is? It is profit. So profit of how much? 1,755 and 1,170. So transfer that profit 1,755 and 1,170. Next, check your balance sheet whether there is any reserve or fund and profit and loss account in your balance sheet. Now go to your balance sheet. So check whether there is any reserve fund as well as profit and loss account. Here there is reserve fund and there is no other general reserve or any other reserves, and even there is no profit and loss account. So what you have to do? We have to transfer this reserve fund, that is 13,500, to the partners in their profit sharing ratio, that is 3:2. So how to transfer? By reserve fund. So reserve fund is 13,500. What is their profit sharing ratio? 3:2. So it's nothing but 13,500 into 3/5 and 13,500 into 2 divided by 5. So when you calculate, you will get 8,100 and 5,400. Now we are done with transferring capital. We are done with realization account balance. Then we have checked whether there is any reserve fund or profit and loss account in the balance sheet. So we had reserve fund and we have transferred. Next, what you have to do? Go through your realization account. See whether you have transferred any account to partner's capital account. Now if you see the credit side, see whether you have transferred to any partner's capital account. No, there is no entry that we have transferred to partner's capital account. In the same way, debit side is also, there is no entry. Then we are done with partner's capital account. We have to balance both the side, and the balancing figure has to be transferred to bank account. Here we are not going to carry down that amount because we are not going to prepare balance sheet. We are closing down the business, so that amount has to be transferred to bank account. Now if you see the amount column of Supriya in the debit side, so debit side it is 0. Whereas coming to the credit side, if you add 32,500 plus 1,755 plus 8,100, you will get 42,355. Your credit side is more than debit side. So what you will do? Now your credit side is 42,355 whereas debit side is 0. So your balancing figure is how much? 42,355. So we'll write both the side and write the balancing figure 42,355. And this amount has to be transferred to bank account. Clear? So this is what? It is balancing figure. Now coming to Monica. Monica also here it is 0. Whereas coming to the credit side we are having 18,070. Now what you are going to do? Credit side is more. Write 18,070 both the side minus 0. You will get 18,070 as a balancing figure. So you have to transfer to bank account. Next account which has to be prepared is bank account. Here we are not going to prepare partner's loan account because no partner have contributed loan to the partnership firm. So directly we shall prepare bank account. So write the heading bank account and you will be having debit and credit side. Under debit side particulars amount and credit side particulars and amount. Now how to begin a bank account? Now if you see your balance sheet, there they have given cash at bank. So where we have not taken anywhere in the problem. So cash at bank how much? 40,500. So transfer that cash at bank to your bank account as to balance brought down. So see your bank account, that is to balance brought down 40,500. This is the amount which was there in the balance sheet, that is in the question. Next, once you prepare your realization account and partner's capital account, it's very easy to prepare your bank account. Now go through your realization account first. So see whether you have transferred any amount to bank account in your realization account. Now here there is bank account, that is by bank account for what? Assets realized. Then how do you record in your bank account? So your entry will be bank account debited to realization account. So how do you record in your bank account? to realization account, what is the amount? That is 69,425. That is to realization account 69,425. To realization account 69,425 for what? This is for assets realized. Clear? Next, again go through your realization account whether you have transferred any amount to bank account. So here we have already recorded, that is for assets realized, as we have taken it as to realization account, we have recorded 69,425. Now come to the debit side. So in the debit side, we are having two bank account here. So what is the entry? Realization account debited to bank account. So how do you record in your bank account? So in your bank account, you will record as by realization account, how much? 48,000. Yes. So this is for what? Creditors paid. By realization account, 48,000. In the same way, go to realization account and see whether there is bank account. Yes, here there is bank account for realization expenses. How much? 1,500. So how do you record in your bank account? By realization account 1,500. By realization account 1,500. So this is for realization expenses. Now we are done with entries, that is bank account, which has to be taken from realization account. So there is no other bank account. Now come to partners capital account. See whether you have bank account in your partners capital account. So in the debit side, we don't have any bank account or the amount which has been transferred to bank account. And the balancing figure we have transferred to bank account. So here what is the entry? Partners capital account data to bank account. So how do you record in your bank account? So your journal entry will be Supriya's capital account data, Monica's capital account data to bank account. So in your bank account, how do you record? By Supriya's capital account and by Monica's capital account, you have to transfer these two amount. By Supriya's capital account, 42,355. By Monica's capital account, 18,017. Now we are done with all the entries. We have recorded the entry or we have recorded the amount which has been transferred to bank account from realization account as well as partners capital account. Now count both the side. When you add amount in the debit side, you will get 1,09,925, and coming to the credit side also, you will get 1,09,925. This is how you are going to prepare accounts during dissolution of partnership firm. And I have told you this is a very important 15 marks question from the examination point of view. In my next session, I am going to continue one more problem relating to dissolution of partnership firm so that you can clearly understand how we are going to prepare accounts during dissolution of partnership firm. My dear students, in today's session, we had solved a 15 marks problem on dissolution of partnership firm. See you all in my next session with a new problem. Till then, take care. Thank you.